Mortgage rates are a little higher today, but it's not because the economy suddenly changed. Two factors are responsible. Oil prices moved a bit higher overnight. That created mild inflation concerns and that nudged bond yields a little bit higher. Then, around 7:45 a.m. Eastern Time, another event added to the pressure. Alphabet announced plans to issue 25 billion in corporate bonds. When a company sells that much debt, investors often shift money out of US Treasuries and into the new corporate bonds because they typically offer higher yields. That temporary selling of Treasuries pushes Treasury yields higher, and mortgage-backed securities often follow. In this case, Treasury yields jumped about 2 basis points immediately after the announcement, and mortgage-backed securities also weakened modestly. Here's the good news. After the initial moves, markets settled down. Today's economic data had virtually no impact, and both treasuries and mortgage-backed securities have remained within the narrow trading range we've seen over the past several days. It's also possible today's weakness is simply a bit of profit taking and repositioning ahead of Friday's jobs report, which is expected to be the week's biggest market mover. Why all this matters for mortgage rates? Today's increases in rates isn't being driven by worsening inflation or weaker economic outlook. Instead, it's mostly the result of slightly higher oil prices, a large corporate bond offering, and investors positioning ahead of Friday's employment report. I hope this information helps. If it does, give me a like and a follow, and I hope you have a great day.